All right, guys, we have David joining us for David from Benchmark Capital. So let me.
Yeah, welcome, David. Yeah, we'll give David a few minutes to talk about his upcoming launch and whatever else he wants to mention.
Hey, bZx network. Can you guys hear me, first of all?
Yeah, we can hear you.
Yes.
Awesome. I had some voice connectivity issues in a prior meeting on Zoom, so you never know with the new normal and technology. I've been a big fan of your project for quite some time, and had numerous calls with Tom, and just good feelings here overall. Do you guys want to do like a Q&A or any questions from the community? How do you want to structure this?
Yeah, so why don't you do like a very brief 2-minute summary of what is benchmark protocol, how does it work, why do we care? Very, very quick 2 minutes, and then we'll do a Q&A session for maybe 5 minutes, and then we'll wrap it up.
Sure, I always try to keep it under short periods of time here because I always have so much to say. But if I'm going to give you the Cliff Notes version, so I'm a traditional capital markets guy. Background VP from Citibank, came up with the premise of our protocol, combination of a couple things. The protocol is a fork of Ampleforth. So the premise of our protocol is based on dynamic supply adjustments. Going back to March, when we had peak volatility in the markets, and you could take a look at the velocity of the correction back in March, it's all about the volatility index. That is what the option market really craves from pricing mnemonics. You take a look at calls and put options, and the volatility index literally puts a premium on how much protection is. So incredible market share opportunity from our end for a true hedging piece of protocol that is really absent from typical cryptocurrency markets. So the way this really works is we import the CBOE VIX data, and it augments our supply, coinciding with the New York Stock Exchange floor. So through collateralization efforts down the line and bootstrap, through our launch on Monday, it's really going to be a true hedging device, in my opinion.
Okay, awesome. Thank you, David. And so
David, just to confirm, so the your mining program starts on Tuesday morning, is that right?
Yeah, so let me give you a breakdown of the timeline. Deposits on Uniswap open on November 23rd at 8 a.m. Eastern Standard Time. And then distributions of the MARK token through our liquidity pools, we'll have 20 set up, start 24 hours later.
And the liquidity mining program contract, so that's like pretty battle tested forked code for everybody.
Oh yeah, for sure. So we took best of breed from Sushi Swap, and I think at one point, peak assets were in the billions. So this has been battle tested since the origination of Sushi. But we have a really talented team of coders on our side. We have a really good guy out in Germany. Our CTO is based out in right outside Washington, D.C. It's been battle tested for sure.
Yeah, awesome. So if the community has any, okay. Avin asks, wait, will Benchmark host options? And what is the utility of Mark? I know the answer to the first one is no. Benchmark is not host options.
No options for now. I mean, listen,
it'd be a hedging tool for people using options, right? It's more like what you're saying.
Yeah, I mean, listen, if you have general exposure, to crypto, and let's say you have a long position, and then there's general volatility in capital markets. Right now, there's been a stronger correlation between crypto asset movement and equities movements from like the S&P 500, the NASDAQ. So generally, you're going to get that protection. We'll be increasing the supply of Mark when volatility is higher in the stock market, which in turn will, we hope, prevent liquidation events.
Yeah, Roman asked if he can buy the Mark token. So it should be available on Uniswap first. Is that right, David?
Yeah, you're not going to be able to buy the Mark token quite yet until the rewards start dripping out through the liquidity pools.
Right.
Then that will establish a market.
But if you're a bZrx holder, you might want to consider, using your bZrx to mine Mark. Might as well. So let's see. Somebody says,
Well, for
okay.
bZrx, Ethereum, if you're contributing, 50-50 through the liquidity pool, then you earn Mark. I believe the structure, the numbers could change, but there are 34 marks distributed per block.
And yes, it's only bZrx, not bBZrx.
Yep.
So George Costanza asks, is the intent that people would take debt positions denominated in Mark?
I'm sorry, what was the structure of the question?
They asked, is the intent that people will take debt positions denominated in Mark?
No, not really. That is not the intent. It's really acting as a hedge towards traditional cryptocurrency assets. Again, our peg is based off the SDR, which is a conglomerate of 5 different currencies worldwide: the yen, the won, the euro, the pound, and the US dollar carrying the heaviest weight.
Maybe some background for people is that the CBOE VIX index is a lot like a general fear indicator for the wider financial market. So
Yeah,
like the idea is like, say you were holding Mark tokens, right? And the fear index spikes up, right? Your portfolio value is going to increase as a result of the fear index spiking up more or less through the expansion of your Mark token supply. And this is going to create a hedge for you in terms of if something negative happened with the market, as it might when fear is high in the market. Is that correct, David?
Yeah. So the volatility index is based off the S&P 500. You hit the nail on the head, right? So when there are times of exponential fear in the market, you will see the markets usually drop in price, and it costs more to buy insurance on options. Hence, the VIX, or the volatility index, will increase. So when that happens is, for our unit holders, they will receive more Mark tokens in such an event. We will be increasing the protocol supply. Obviously, it depends. Usually when you increase supply, price drops. So there's no guarantee. It depends on the economics of supply and demand, what happens to the underlying price of the Mark token. That's speculation from a price perspective. But that's the general sense, that you'll be offsetting liquidation events.
We could almost be thinking of Mark as another player in the insurance kind of field. I like to explain. So right now there's like open, and they have options, and you might use those options as insurance to hedge some asset, some negative, some price falling of some asset. With Mark, now you have a kind of alternative to insurance with options. It's another way of just kind of reducing your exposure to risk and volatility. Is that a way you might conceptualize it, David?
Yeah, I think that's extremely synonymous with kind of what we're going towards. It is, you're buying insurance for your portfolio, essentially. You're getting assurance that if your crypto positions across the board, let's say there's a geopolitical event which just wreaks havoc on traditional markets, you're probably going to have cross correlation now towards Bitcoin and other altcoins. So it's absolutely an options play. You are buying insurance, in my opinion. If the protocol works correctly, which we presume it does, you're buying insurance for the rest of your portfolio. And the great thing is, sometimes traditional cryptocurrency investors, they don't have brokerage accounts with TD Ameritrade or Fidelity or Charles Schwab. So it's a nice in-house play to protect your basket of assets.
So Evan asks, is it like the opposite of options? It's no, it's similar to options. It's just slightly different dynamics and risks and payoff like payoff conditions to options, but they're used in similar sort of situations and ways. It's used to protect your portfolio as
Yeah,
insurance.
the dynamics of options. I mean, we could do a course on this. This is like investing. It's not 101. It's complicated. But
That's investing 901.
market, the options market have specific criteria around it, right? There's a strike price. There's an expiration date. You could go on the long side or the short side. The mark token's not doing that. It's the protocol is laid out by very specific terms. You know, we have a lot of material in our white paper and our light paper. It's definitely a good resource for anyone interested in learning more. But we're definitely excited about what's to come. And we're really excited about this partnership with bZx. We think it's going to be a fruitful relationship and a lot of collaboration opportunities.
So Jag asks, if already providing liquidity to ETH bZx LP, what should be done to claim mark? So just like you were using Sushi or any of these other pools, you're just going to deposit your LP token and you'll start mining mark.
Yep, the Uniswap LP tokens. I think the only non-Uniswap LP token we'll have is for the Sushi Swap pair, which will be on their native AMM. But yeah, I mean, there will be, it's a very easy platform from a UI perspective to use. You stake your tokens, you get your rewards, then you unstake, you claim your mark tokens. It's about it. We'll come out with a tutorial, probably a video session as well that people could refer to. We'll probably release that this weekend.
All right, guys. Thank you so much, David, for coming and talking about Mark. Really exciting product. I think a lot of applicability for our margin traders in terms of hedging their portfolio and having insurance. Tom?
Yeah, everybody check out, their launch is, a big deal happening early next week. So be sure to check it out.